Good evening, everyone, and welcome to the Brian Crombie Radio Hour. Tonight, we're going to be talking about housing, the real estate market, etc., with John Pasalis, who is president and broker of Realosophy Realty Inc. And we'll talk a little bit about that because you've got a different sort of strategy, I think, John, because you actually prepare a lot of reports and analyses and present that to the market. And I think it's an interesting marketing strategy that you've got, because I presume it's a marketing strategy. But I want to talk about an article that you just released, which is really a study that you released called The Great Sell-Off, How Our Homes Became Someone Else's Business. And let me quote before we get into it from the first part of your article, if I could. Every election we hear the same promises: more housing, more affordability. But for the next generation, home ownership is slipping further into fantasy. I've been in the real estate business for over 20 years, and in that time, I've seen young home buyers lose hope, and parents wonder why their children can't afford what once seemed attainable. For decades, the benchmark for affordability was simple: a home should cost no more than 4 times a household's income. Today, the number is closer to 10 in Toronto and 12 in Vancouver, a level once considered unthinkable. What's happened? What's got us to this situation, John?
Well, a lot of things, but what I unpack in the book is that the role that housing plays in our country, in our society, has completely changed. 25 years ago, the dominant buyers of homes were, of course, households. And in that world, house prices are constrained by income. They can't really go up much higher than people's salaries, people's savings. So there's a natural limits to how rapid home prices can grow. And Nobel laureate Robert Shiller, who's an expert on housing, talked about how in the 100 years before the 1990s, home prices didn't actually appreciate very much after adjusting for inflation because they were constrained. Now, since then, the whole world has changed. Houses have become this globalized financial asset. Money is flowing into them from, wealthier people, my generation, the generation before me, who are using them as a shelter, as a place to store their capital. We have institutional investors raising hundreds of millions of dollars to buy single family homes. So homes have become a financialized asset. They're no longer constrained by income. They're being fueled by capital. And so we're living in a very different environment. And this is why, despite all the promises, home prices keep increasing because they're not constrained by wages anymore. They're driven by capital. And I think we really need to think about that when we're thinking about how to move forward to make housing more affordable for Canadians.
So many people, I think a lot of people think that the lack of supply was the issue, and it was red tape, it was regulation, it was development fees, it was taxes, etc., that constrained the construction of housing, and that's what drove housing prices up.
Mm-hmm. Yeah, this is a very simple, economics 101 explanation. I think that economists have been leaning on. The challenge is that theory kind of holds, again, 30 years ago when the dominant buyers of houses were households and house prices couldn't appreciate rapidly. The reason that theory doesn't hold so well today is, again, the theory that the economists have is that if you just reduce the red tape, we could increase the supply rapidly. And in fact, we can increase it far more than any boom in demand. And the problem with that is I don't buy it. At the end of the day, capital flowing into houses has no limit. It has no constraints on it. It has no frictions. Whereas housing, when you're building houses, even if you remove the red tape, there is a limit to how much builders can build. There's a constraint in the suburbs.
But we're building as many houses today, supposedly, as we did in 1970. We should have some ability to build more with the population growing, shouldn't we?
Say that again?
We're supposedly building as many houses today as we built in the 1970s. Mm-hmm. We should be able to build more. We need to build more. Why aren't we, shouldn't supply be increasing?
Supply should be increased. I think we need to do as much as we can to increase supply. I think you're kind of misunderstanding the point. Certainly, municipalities have a role in removing frictions. My point is that no matter how many you remove, explain this to me. I mean, even if you remove the frictions, okay, that are municipal restrictions, you still need infrastructure. You still need roads. You still need sewers. You still need water if you are building in the suburbs, okay? If you're trying to do infill, if you're trying to build within the existing cities, which is what a lot of urbanists and housing supply advocates are talking about, you have another constraint that that land is already developed. So you need people to sell homes to increase density, which is a lot harder to do than 50 years ago when I live in sort of the east end of Toronto. All of East York was farmland. It was a lot easier to just build thousands of houses when you have undeveloped land. When it's all developed, you have a natural constraint. So yes, you can increase supply, but capital's flowing into housing far more rapidly.
So what do you think we should do? Restrict capital from moving into real estate?
Well, I think it's about incentives. Again, I think this challenge is not just about investors. Our home ownership rate in Canada is declining, right? And it's declining because fewer homes are owned by Canadian households, more homes are owned by investors. And this is not just impacting housing affordability, it's impacting Canada's productivity. Canada is one of the least productive countries in the OECD. In fact, second from the bottom out of almost 30 countries in terms of productivity growth, because Canada has built a system that doesn't encourage investment in businesses. We built a system that encourages people to park their money in houses and wait for prices to rise. And I don't think that is a very good system. I do think Canada needs to disincentivize people from hoarding homes, make that a less profitable investment, which makes it more available for households and encourages businesses to actually invest in business rather than just sitting on houses.
So how do you create incentives for people to disinvest in housing? Isn't it by increasing the supply so that there's more available, so prices come down? Like, obviously, if prices are going to appreciate because of lack of supply, capital would go into those homes because it's a great way to get capital appreciation. So which comes first, the housing supply or the capital, the interest of capital investing in homes, or is it both at the same time?
Okay, number one, house prices over the past 5 years did not appreciate because of a lack of supply. I mean, again, I think this is, I mean, in theory, you can say a lack of supply, but what was driving it was our population boom surged. We went from a country that was growing by 350,000 people per year to 1.2. We had record low interest rates. You can get a 5-year mortgage in the 1% range. So you had a capital flowing into housing. So to say that it is a lack of supply that caused this boom and run up, which is what the experts are saying, which is kind of what you're suggesting, then one must believe that you can triple housing completions overnight just by flipping a few switches so that the supply can keep up. And this is what politicians have been arguing. This is what the housing experts have been saying is possible. And I don't buy it. I throw it back to you. How do you think we can triple housing completions overnight to accommodate this boom from a population surge and from capital flowing in because of record low interest rates? Because I have not heard how anyone can do that. So to say it is a supply problem assumes that you think it's possible. And what I'm saying is it's not possible because capital has zero frictions and can flow into housing far more rapidly than anything you can do on the supply side.
So let's unpack it. So first of all,
Sure.
record low interest rates. No question. We had record low interest rates. And so I think what ended up happening when you have record low interest rates is assets appreciate. And that happened in the stock market and that happened in real estate. And there's no question about that. We don't have record low interest rates now. And so therefore, to a certain extent, that's gone away. It may be coming back. And interest rates certainly have improved over the course of the last, 2 years, as inflation has come down and interest rates have come down. But they're not down yet to the level they were in 2017 to 2020 or 2021. And those record low interest rates were the function of, number one, increases in the money supply and monetary policy coming out of, first of all, the Great Recession, and then number two, reactions to the pandemic. That did fuel inflation, and central banks increased the interest rates and hopefully have dissipated the level of inflation. At least they have in Canada to a certain extent. So, yes, I agree. There's no question that low interest rates had a huge impact, not just in real estate, but in almost every asset class. On supply, we are building, as I said, as many homes in Canada today, supposedly, according to statistics, as we did in the 1970s, and our population is twice as large. And so clearly that's got to have had an impact, and supply and demand's got to have an impact. And we've made it far more difficult to build homes. And so therefore, I'm not sure if we could triple home ownership, sort of home construction, but we could do better. It takes 3 times as long to get a development approved as it does to build it. We've put in place the Greenbelt, which has restricted any suburban expansion into the Greenbelt or made it more expensive to go beyond it. We've made with development fees and taxes, housing. 31% of a new house is taxes and development fees. So we've made it uneconomic, certainly from a taxation standpoint, to build homes. So we're doing a whole bunch of things that restrict supply. And the example people often give is if you've got waterfront property, for example. So somehow you've got a limit on supply because you got a limited supply of waterfront property that will go up greater than a typical suburban tract. And it does because there's a limited supply. Well, we've done the same thing in housing just generally. But to come to your main point about, can we triple our housing construction? It's a huge challenge. There's no question. We've got, some people think that an industry that's got less technological influence on it, less productivity. We're still building homes the same way we built homes 20, 30 years ago. Waste is huge. Time off is huge because of weather, because of winter, etc. So there's a challenge in increasing supply. There's just no question.
Well, 100%. I mean, obviously, there are challenges. And of course, municipalities and provinces should be doing more to encourage new housing. But again, we're living in a very different world. It's a lot easier when you're building housing on undeveloped land, which is what we were doing in the 50s and 60s and 70s. And today we're trying to do it in developed areas, which is a very different shift. And of course, we're still building some houses in the suburbs and newer housing, but the push is for more density in existing neighborhoods. And that's a very different challenge than what they had 50 years ago.
We're going to take a break. Good conversation. Great discussion tonight talking about housing and what the solution is. Is there a solution? And is it because of lack of supply, or is it because of making it a financial asset and a whole bunch of money running into housing? Stay with us, everyone. Back in 2 minutes. Here we go. Welcome back, everyone, to the Brian Crombie Radio Hour. We're talking housing tonight with John Pasalis, who's just released a really long, interesting analysis of what he thinks the cause of housing appreciation and price increases and inaffordability has been caused by. John, you're a broker. You're a president broker of Realosophy Realty Inc. So, I would have thought you were just trying to sell homes, but you actually produce some of the best stuff I've read online in regards to analysis of the housing market. Why do you it's almost as if you're a consultant or a research analyst as well. Why do you do that?
Well, I mean, firstly, thanks for the feedback. I appreciate it. I mean, it's something I've been doing for quite some time. I've been analyzing the housing market for decades, really, since I've got into the business. I think it's just an interest, it's a background. And again, I think more recently, historically, I was just analyzing Toronto real estate stats and trends. And over the past 5 or 7 or 8 years, I think a lot of my research and analysis has kind of shifted to some of the challenges with our housing market, this lack of affordability, and trying to be a bit of a contrarian to some of the theories and ideas we're hearing, because I don't think they all make sense. And we're trying to just give viewers and listeners a different perspective in understanding why things are getting worse, progressively worse, despite all the promises.
So you take a look at the Sun Belt in the United States, and you've probably read a lot of these statistics. They've got rents and housing prices going down and under pressure. They talk about Florida and Texas and a lot of other Sun Belt cities that are coming down. Austin, for an example, Texas has had housing prices and rental prices going down. And they say it's because of dramatic increases in supply. So why don't we just, get out of the way of developers and start building? And maybe that'll solve the problem.
So it's a very good theory. I mean, I think if you actually look at the statistics, and I have them in my report. I mean, I don't have rental statistics, but home ownership statistics. The reality is, if you look at Texas, these states where it's apparently very easy to build and prices should not appreciate, home prices in those neighborhoods in those cities and municipalities has significantly appreciated far more rapidly than the national average. This idea that they are falling and affordable, I think, is a misconception. And in some markets like Austin, yes, rents are finally starting to fall because they overbuilt. We're ignoring the fact that prices and rents have surged over the past 5 or 7 years. So this idea that Texas and these southern states have figured it out, I think, is not entirely accurate. And I think the more important thing we got to think about is, listen, if we look at where Wall Street is raising billions of dollars to buy up single family homes, the regions that they are investing most heavily in is in the Sun Belt, in Texas, in Atlanta, where in theory it's easiest to build, where according to the academic theories, home prices and rents should not appreciate. So either Wall Street's clueless or they do not buy this theory that these markets are not going to appreciate. And I tend to think it's the latter. The market moves and adjusts far more quickly than academia. And our housing solutions are rooted in academic theories from 20 years ago, where the world has evolved and Wall Street has evolved.
Okay, well, if you're right, and you say it in your article here, it's pushed housing further out of reach of younger Canadians, many of whom no longer see a realistic path to ownership. Unlike earlier generations, they are not up just against peers with similar means. They're up against capital rich investors whose buying power is unconstrained by income. I was in Manhattan recently, and I was looking at a couple of developments, and the broker was pointing to buildings across the street, and he said, these are high-end luxury buildings that are going for a couple $1,000,000, but no one lives there because it's all foreign money that's come into the city, parked their money in gorgeous homes because it's one of the safest bets for foreign money to buy condos in Manhattan. Is the home vacancy homeowner, vacant home tax the right solution? Is it a foreign buyer's tax? Like, how do I discipline the capital markets from doing this, which is negatively impacting not the supply, but the supply that's available of homes?
Well, I mean, certainly. I mean, the vacant home tax, which the city of Toronto has, can be one way. And listen, I think the bigger issue is, I mean, we have to think as a society, what do we want? Do we want homes to be this get rich quick scheme in Canada, which has fuel prices up and killed our country's productivity? Or should they be affordable for the next generation? And I tend to fall into the latter camp. And I tend to think for them to be affordable for the next generation, they need to be less lucrative investments for this generation. So policymakers can put in more barriers to make it harder to buy investment properties and make them less profitable when they sell them by taxing them differently. And a lot of other countries are doing this. Canada's not, because we lean on homes as a get-rich-quick scheme. And I think that has many negative side effects.
Well, this is the second argument you make. And let me read from your article again, if I could. Second, it has distorted the allocation of capital across the economy. Money that could be funding innovation, productivity, and job creation is instead being poured into the ownership of multiple properties. Canada has built an economy where the best way to get rich isn't to invent, create, or build anything, it's to own houses and wait for prices to rise. So again, I got to ask you, if you're right, how do you stop it? You're saying increase taxes. So what, get rid of the principal residence deduction, or increase the capital gains tax on home ownership, or a house flipping tax? Like, what is it you're going to do to discourage investors from getting into homes?
Sure. So I'm not talking about taxing someone's principal residence. I mean, that's not what we're talking about. Someone who owns their own home, this has long been seen as a retirement asset. So I'm not talking about that. I'm talking about investment properties. So yeah, there are, I mean, kind of two broader ways to discourage this. If we think that this is a problem in the role that it's having, both in Canada's productivity and home ownership, you can do two things. A, make it harder for investors to buy, changing down payment requirements. A lot of countries have different land transfer tax rates if they're second, third, fourth properties. And the second is to just make them less profitable, to tax them as income rather than capital gains. If you kind of get rid of this benefit, you're going to have less people investing. And it's not about banning investors. Some people are still going to want to invest because they want to hold property, which is fine. But if you kind of make it less lucrative, it moves capital back to investing in businesses rather than hoarding homes. And again, I think that that is a positive thing for our country, both for housing affordability and for the future growth of our nation. And I think that is a positive step.
I was at a speech recently by Benjamin Tal, who's the economist at CIBC that talks about the housing business frequently, and he said that we've effectively solved this problem. We've solved it by increased interest rates that have made the interest that investors got to pay far more expensive, and the lack of appreciation, such they can't solve their solution through appreciation and through lower rents. And he said. And he came up with a study about a year ago that something like 85% of the people that own condos today that are renting them out are losing cash flow month on month. And that because of that, the condo business, the pre-construction condo business is dead today. That out of 92 projects that were launched supposedly last year, 90 closed down. There are only 2 that proceeded. So is the issue that you're talking about, has it been solved?
So certainly investor demand has slowed down in the short term. To say that it has been solved is not something I agree with. I mean, if we rewind the clock, in around 2012 or 2013, and I cite this in my report, Nobel laureate Robert Shiller, and I talked about this, was talked about how investing in housing was a fad during the global financial crisis. It was, because homes are generally not investments, and he doesn't see people rushing in to buy single family homes anytime soon again. And of course, that's not what happened. What he's looking at was a short-term lull. What happened was not only did investment increase, it has completely transformed. Since then, institutional investors are raising money to buy homes. So this idea that investment is gone for good, this is a cyclical dynamic. And I think what I'm talking about is ensuring that once we get out of this lull, our foundation is solid so that even if prices dip, the people buying those homes are people who are going to live in them rather than people capitalizing on price declines like my generation who are looking at them as an investment. So I don't think it has been solved. What we're talking about is a short-term dynamic, a cyclical dynamic, and we need to be thinking long-term.
So he actually had an opposite point of view in that he said we got a big problem right now because of the lack of investor interest in home ownership and investment in condos and things like this. Our supply is going to go even down farther, and that supposedly there's something like 36,000 pre-construction condos delivered in 2024. There's going to be something over 20,000 delivered in 2025, 18,000 in 26, and it's down to like 2,000 in 2027. And he says if that continues, we're going to have a crash in condos that we've experiencing right now, but we're going to have a lack of supply. And then this massive boom again in 2027, 28, 2029. And we get back into this problem of boom, bust, boom, bust, boom, bust. And he says what we need to do is make sure that people come into the marketplace on a regular basis. What do you say to that?
Listen, I think the problem with this narrative is that we are where we are. We are in a bust because Canada thought it was a great idea to build homes by selling them off to investors. Okay. If you look at our condo market, it was largely driven by investors. And when you have your entire new housing market driven by investors, you run the risk of it becoming a speculative bubble. And that's what it was. Okay, so yes, supply surged, people bought, but they bought at ridiculous prices. And new housing now has plummeted, not because no one needs a home, because no one is willing to pay the insane prices that pre-construction condo investors were paying 2 to 3 years ago. So this entire boom bust cycle is because we've been so addicted and dependent on using homes as a financial asset. Okay. Households do not pay 30 to 40% more than resale the way condo investors were. So if we had if we had a housing system that wasn't addicted to speculative real estate investing, we wouldn't have a condo bust today. It's all driven because it became a speculative bubble.
And one of the negative implications that you point out, which is really concerning, is that because of that, private investment went into homeownership rather than into more productive parts of the economy. What's then the implication of that?
Well, huge. I mean, like I said, if you look across the OECD, Canada is like second last in terms of productivity growth. And like this is not a new argument. This is economists, the Bank of Canada has been talking about this for years. And again, one of the challenges and one of the reasons for that is because as a country we've prioritized investing in houses. It's more lucrative. It's easier to get a mortgage than it is to get a bank loan. You can get a $600,000 mortgage a lot easier than it is to get a $20,000 loan for your business. So again, these are it's all shifting incentives. And I think if we're going to build a strong country in the future, we need to get off of just hoarding houses and encouraging people to invest in their businesses.
So if you were Minister of Housing or Minister of Finance, what would you do tomorrow?
I mean, I think as I mentioned on a report, I think I would introduce disincentives to just hoarding houses. Not immediate. I mean, we need to think about ripple effects. You kind of do things casually and try to encourage more investment into businesses. Again, it is about reallocating capital in this country. And I don't think this is, I think earlier you said the cause of our housing. I don't think this alone is the cause of our housing crisis. I think there's a lot of reasons for it. I think this is an important one. And this is not going to change things overnight, but it hopefully moves us to a path where housing becomes more accessible for young Canadian households rather than a financial asset for investors.
John, I've really enjoyed reading your articles. If people want to follow you, what's the best way for them to do that?
Sure. I mean, they could find me on Twitter. I'm pretty active on Twitter. Our YouTube channel is called Move Smartly, and our blog's called Move Smartly as well.
And doing this analysis, preparing these reports, does it help you actually market your business?
I mean, I've never quantified it. Listen, I think some people, as much as some people like it and they come to our, work with us, some people don't like it. If you're kind of in the investment space and speculating in condos, you're not, you don't love what I have to say because I'm discouraging that. So I don't really do this to generate business. I mean, I do this more obviously because affordability is important to me, and this idea that the entire generation is getting shut out because of a lack of affordability is important. So that's really why I do it.
Well, John, I got to tell you, I really enjoy reading your research and your analysis. I don't agree with all of it all the time, but I enjoy reading it. And I think the benefit is that from you, I feel like I'm actually getting someone who talks about what they've analyzed, what they understand, what they believe, rather than too often I get just a sales pitch. Mm-hmm. And when I just get a sales pitch from a real estate agent, best time to buy is today. I don't know if I'm actually getting anything that's really honestly their point of view and good advice, or whether it's just their best way of getting a commission. And so I got to tell you, I think that your authentic, deep analysis is really helpful. And thank you for joining our show and sharing some of that with us.
I appreciate it. Thanks, Brian.
We're going to take a break, and I'm going to come back with a couple of my 2 cents on this topic in just a minute. Stay with us, everybody.